Over the past few months, some traders on WallStreetBets have been getting insanely lucky. The only problem is that, well, luck isn't really a good investment strategy. What if I told you that you can beat Wall Street analysts and actually strategically get these lucky gains? Or can you? In today's video, we're gonna see if Biaheza's trading strategy can get us even crazier gains than these lucky individuals on WallStreetBets. All jokes aside, the results are pretty shocking. On June 14th, Biaheza uploaded a video about his self-proclaimed, simple $5,000 a day stock trading strategy. This title is obviously clickbait, but the strategy he goes over in the video is actually pretty valid. Social arbitrage swing trading leverages real-time sentiment and conversation on social media to identify profitable market opportunities. This is great and all, but let's jump into what this actually looks like with a real example. The first trade we have to add to our portfolio was made in late July. During this time, McDonald's was celebrating their weird purple dog's birthday. This is pretty significant because GRIMACE happened to have his very own shake. And if you're someone who has TikTok or Instagram, you would know that this shake had people feeling pretty wonky. The GRIMACE shake was turned into a widespread trend that had people laid out on the ground. This peculiar trend continued to boost people's curiosity about what the shake tasted like. That being said, of course, kids and adults from all across the country raced to get their hands on that delicious purple beverage. Okay, maybe they weren't racing to get it, but demand for the shake was definitely increasing. After seeing all this commotion about the drink, and even seeing GRIMACE in person at my local McDonald's, I just knew what had to be done. The day before McDonald's released their earnings, I purchased about $2,000 worth of calls. I was feeling pretty good that day. It was pretty much a done deal that I was gonna wake up and profit the next day. Fast forward 24 hours, I woke up and before checking my portfolio, I simply just Googled McDonald's earnings. And just like I expected, their earnings were outstanding. McDonald's was up 3% pre-market, which is actually a whole lot for a stock like McDonald's. But since it was still before trading hours, I obviously couldn't sell my calls yet. Just doing the math, a 3% gain would have meant that I would have 3 to 4x'd my money. I still had some time till the markets opened, so I put my phone down, ate some breakfast, and went about my morning routine. I looked at the clock and it was finally 8:30. I opened up my E-Trade portfolio and was flabbergasted. Somehow, I no longer had a theoretical 4x gain, but I was now down 25%. McDonald's was now red for the day and was no longer up 3%. After seeing this, I was like, geez, it felt like somebody dropped a coconut right on my head. But then, the tables turned. I knew that McDonald's couldn't possibly remain red for long after having such amazing earnings. That being said, McDonald's began to rise up again after a few minutes. I ended up closing out at a 2.5x gain and cashed in a decent amount of profit. This gain alone is already pretty crazy and puts our total gain percentage at 250% so far. But this is just the beginning, and things get even crazier. I was scrolling through Instagram Reels and I was searching for my next move. This is when I started to see more content about Temu. Temu was already on my radar for the past couple months, and I had already been gradually stocking up on some shares, but earnings were coming up in a few days, and I decided that it wouldn't be such a bad investment. PDD is the company that actually owns Temu, so I loaded up on some calls the day before earnings. Just like clockwork, I woke up the next day to see that Temu had flew past earning expectations and was up 19% in the morning. I quickly sold my calls for a 3x gain and locked in another calculated profit. The crazy thing is that the stock would continue to rise that week and rose to being up about 30%. Regardless, these two trades put our total portfolio at a 7.5x gain. This is already insane, and I'm not gonna lie, these were the biggest trades from this experiment, but we still do have 3 more smaller trades that add to our total portfolio. Swatch Group is a Swiss manufacturer of watches that was releasing earnings during this time. Funnily enough, Biaheza actually made the call on this one in his video, so I just went ahead and purchased it. You can't buy options, so I didn't really have too much to lose. But when earnings came around, the stock rose about 11%, which is pretty darn good for plain shares. Target is another company that I was interested in buying calls for. The stock had taken a beating for quite some time, and I thought their earnings would be decent enough to at least not be red in the position. This trade is probably the most loosely based on the strategy, but I still thought it was a good buy, so I'm gonna throw it in the list. Target was up about 5% the next day, and my options were up about 60%. When you add all these together, this brings our total portfolio value to a whopping 13.32x gain. I'm sure this all sounds amazing, but I gotta be honest, guys. I've been keeping a little bit of a secret from you. During this experiment, I managed to make one bad trade. I was scrolling through Instagram Reels just like any other normal person, and I noticed that I was seeing an increase in Roblox content. Their earnings were coming out on August 9th, so I thought it would be a good idea to load up on some calls. The only issue is that I let greed get the best of me. I was so successful with this strategy that I thought I was the next Wolf of Wall Street. With this increased confidence, I bought $11,000 worth of calls. I was pretty excited after buying these options because I was so sure that I was going to profit on them. The only thing is that Roblox's earnings report was not looking so hot. The next day, Roblox was not down a measly 5% or anything like that. Instead, it was down 22%. I know I talked about how it felt like someone dropped a coconut on my head with the initial McDonald's loss, but this time it felt like someone dropped a bowling ball on it. Looking back, it probably would have been a good idea to not make this trade, but hey, you win some, you lose some. I'm gonna take the blame on this one and not hold it against the strategy because I didn't do as much due diligence as I should have. Even though it was my own mistake, it does bring up some important things to keep in mind when trying to use this strategy. 1, don't get too greedy. 2, just because something is being spread online, it doesn't always mean that it's gonna make more money. And 3, you have to remember that you are using social media to find these stocks. And that's not a bad thing in of itself, but you have to remember that you might be thrown off because of algorithms on certain apps. For example, let's look at Roblox. If I saw a couple Roblox videos and I was watching those all the way through, I would then in turn be recommended more Roblox videos, which would then make me think that Roblox was doing better than they really were. Overall, I still think it's a really good strategy, and hey, we would have been up 13x if I didn't stray away from the strategy and dump the gains into Roblox.